What is tax and why do we pay it? And why is it even a big deal when we don't? A few months ago, the current administration signed 4 new tax bills into law that basically turned the existing system inside out, the Nigerian Tax Act of 2025. In this video, we'll go through everything you need to know about these new tax laws, as well as insights into why they matter, and more importantly, what they mean for you.
They're basically saying the higher you earn, the more you pay.
In this episode, I'm joined by Ugodre, the founder of Nairametrics, one of the largest economy news platforms in Africa. Welcome to another Finance Friday episode, and without further ado, here's the truth about tax in Nigeria and Nigeria's new tax bill. In its simplest form, tax is money paid to the government so that society can function. It is the price we pay for certain public goods and services that we may not be able to obtain individually. So, road networks, hospitals, schools, electricity grids, and of course, the security that makes it all possible. On paper, it's supposed to be a pretty simple trade. Citizens contribute to a large pool of funds, and the government redistributes said funds to where and how they are needed. But in practice, it is more than just money leaving your pocket. It is a form of investment. Now, a lack of results may be why some people claim they will only pay tax if the government does something good. Unfortunately, it doesn't work that way.
Government doesn't need to do anything for you to pay taxes. The fact that you live and you breathe the air is enough for them to tax you, and that's why they tell you the most permanent things in life is rain and taxes.
The system is designed so that revenue comes first, then the government delivers, not the other way around. So while the concern about how the funds are used is real, skipping your taxes only makes the delivery gap even wider. This is why taxation is usually described as a form of social contract. In its most ideal form, everyone plays their part and everyone should also benefit. However, when it does not work, the result is a bunch of loopholes, avoidance, tax evasion, and eventually a system that places the burden of tax on a few people. Sadly, on top of inflation, infrastructural shortfalls, and a struggling economy, Nigeria falls in the category where things are not working as they are supposed to. Which then brings us to the question of why? There are 2 main reasons that Nigeria has remained in a tax rut over the decades that the current system has been in place. The second reason almost sounds unbelievable, but we'll get to that in a bit. The first problem is multiple taxation. In the current tax system, multiple taxation at different levels is its biggest drawback. From the federal to the state to local government levels, each branch places its own tax and levies on individuals and businesses. For example, at the federal level, companies pay income tax. There's also a petroleum profit tax and their own share of value-added tax. At the state level, personal income is taxed, plus a bunch of other fees that overlap with the federal authorities.
Now, the federal government also takes personal income taxes, but mostly for their own employees, maybe like employees in Abuja, military, that tend to come under the federal government. But for businesses, individuals, they all fall under states. In fact, that's the major income earner for states. And for Lagos State, for example, the reason why Lagos State has the highest IGR in Nigeria, IGR is a terminology for internal generated revenue, and it's really all about taxes, really. Internal generated revenue is taxes, and Lagos State gets the most taxes because Lagos State has the commercial capital of Nigeria, and most people work in Lagos, and so they make a whole lot of money.
Then there's the local government where the levies are collected for motor parks, licenses, parking fees, and even TV licenses. For most people, keeping track of all or which of these taxes to pay is more effort than the average person is willing to put in. Unless you can afford to hire an accountant to put all of this in order, chances are you are probably defaulting in 1 or 2 areas. But that brings us to the second more pressing reason that Nigeria's tax system has been in a rut. The simple answer: Nigeria is not generating enough tax revenue. Just wait. Before you come for me in the comment section, let me explain. Nigeria has one of the lowest tax to GDP ratios in the world. That is a measure of how much money a country raises from taxes compared to the size of its economy, or the gross domestic product, GDP. At about 13.5%, Nigeria sits several times lower than other countries in Africa, despite having the largest population and larger economy than most. Before now, it was as low as 9%.
Countries are usually assessed based on tax to GDP ratio. And so your taxes as a percentage of the size of your economy, which is what GDP is, really determines how rich that economy can be. So the richest countries in the world are classified under what you call OECD countries. And so most OECD countries tend to have tax to GDP ratios of above 35-40%, some even 70%. So which means they do get a lot of taxes from the economy. However, in Nigeria, our tax to GDP ratio is a tiny 9%. So you see, pretty small. And so part of discussion too was that, look, it's because of the way our taxes are structured. So people don't like to pay taxes. And so for that reason, our tax to GDP ratio is also small. So these are some of the reasons why they decided to work on this tax reform bill.
Now, there are definitely questions about whether or not the economy is stable enough to squeeze even more money out of it, but we'll get into that later. For now, the government is hoping to lift Nigeria's tax to GDP ratio to around 18% over the next 3 years. How? By shutting down loopholes, automating collections, and cutting away unnecessary duplicates that make compliance difficult for businesses and individuals. This is where the 2025 Nigerian Tax Act comes into the picture. So let's talk about these new tax laws. The new tax bill contains 4 main laws. The Nigerian Tax Act. This one combines all the many old laws into one and eliminates more than 50 overlapping taxes. The goal for this act is to make the tax system easier to follow. The Nigerian Tax Administration Act. Here, the government has moved to unify the rules for tax collection at the federal, state, and local levels. As I explained earlier, this will also improve clarity and reduce the administrative clashes over funds. There's the Nigerian Revenue Service Act. Starting in January 2026, the body that has controlled and overseen taxes will be replaced. The Federal Inland Revenue Service, FIRS, will make way for an independent Nigerian Revenue Service to regulate how taxes and other government revenue is managed. Then we have the Joint Revenue Board Act. This act establishes a neutral body or neutral third party and a tax appeal tribunal to facilitate dispute resolution and intergovernment coordination where needed. With all these things in mind, we will now get into the specific tax categories. So, this is where you come in. There are a few categories of tax payments that will go into effect with this new bill, with each one being tailored to specific groups and specific income brackets. Let's talk about personal income taxes. In Nigeria, income tax is collected on a progressive system, which means that the more money you make, the higher the percentage of said income is paid in taxes. So with the new bill, people earning 800,000 naira or less annually are now fully exempt from paying income tax.
If you want to say what's 800,000 naira per annum, that's probably like 70K or thereabout per month, are not meant to pay tax. Now that's interesting because a lot of people fall under that bracket. So think about your house helps, your maybe the organizers, maybe the artisans, maybe the waiters, waitresses. Like these people would typically fall under that bracket. So for those kind of people, the new tax law exempts them completely from paying tax. So they don't pay any tax at all.
The new system now has percentages assigned to different income bands. So people earning above 800,000 naira to 3 million naira annually will pay 15% in taxes. The next group is for people earning above 3 million naira to around 12 million naira, who will now pay 18% of their income in taxes. At the highest end are people who earn 15 million naira per year, who will pay 25% of their income in taxes. I'll have this table by KPMG linked in the description below so you can download it and check out where your income bracket falls under and how much you'll be required to pay in taxes. And if you want to dive deeper into some of the specifics, I'll have it there in the description below. Let's talk business taxes. Businesses will now have fewer levies to pay. The newer ones are still quite the punch. Businesses are still expected to pay their 30% corporate tax rate, but now the main add-on is a 4% development levy. This comes in place of a bunch of old charges that included the education tax, IT levies, and the police trust fund. Now, businesses with under 100 million naira in revenue and under 250 million naira in assets are considered small businesses and are now completely exempt from paying corporate tax, capital gains tax, more on that later, and the new levy. The only exception to this rule would be firms that offer professional services. No matter how small, they do not get any exemptions. As for the big money movers with more than 50 billion naira in turnover, or running as a part of a multinational with global revenue of more than 750 million euros, they are required to pay the minimum tax rate of 15%. Alright, now to the categories that not a lot of people saw coming. Capital gains tax and digital assets. When selling assets, the gains you make are now taxed at the same rate as your personal income. So rather than the 10% flat rate, you could be paying as high as 25 to 30%. For example, if you buy a piece of land today at the heart of Lagos, in Ekpe, for 100 million naira, and then you sell it in a year or two for 150 million naira, you will be taxed based on the 50 million naira profit and no longer a 10% flat rate. The capital gains tax follows the same progressive nature of the personal income tax, so the amount you pay can climb pretty quickly depending on your income bracket. And the really interesting part, the new law now extends to digital assets. So yes, gains made from the sale of cryptocurrency or other virtual assets now count as taxable income. Also, selling shares of foreign companies that own a Nigerian business also attracts a separate tax. Speaking of the separate tax, there's also the new VAT sharing formula. Let's talk about that. So VAT, value-added tax, while value-added tax remains 7.5%, the distribution system has changed. With the new bill, the federal government now gets 10% of VAT, while states get 55% and local government get 35% of VAT. Within the state and local government, it is further broken down to have 50% shared equally, then 20% shared by population, and the remaining 30% shared by actual consumption. Basically, states with larger populations and stronger consumption bases like Lagos, for instance, and other major states will see larger inflows from the VAT pie. And while we're on the topic of states and local governments, residency tax laws were also addressed in the new bill. Regardless of where you work or what currency you get paid in, you are expected to pay tax here in Nigeria, as long as you have lived here for more than 183 days.
Tax by law university is based on where you live, not where you earn. Okay, it's always the biggest misconception. So most times people think, oh, I work with Google, I'm based in Nigeria, so my taxes not to Nigeria, like was their own, I'm going to pay taxes to American government. No, it's about where you reside. So that is why, for example, if you live in America, most people like to live in New Jersey, but work in Manhattan in New York. Some people like to live in the outskirts of London instead of in central London because taxes in central London is typically higher. And the reason why it's higher is that central London has a whole lot of stuff. There's a whole lot of facilities that they provide to people who live there. So to enjoy the benefit of central London, you got to pay high taxes for it. So the only thing you can do is drive into central London, but you can't live there, right? So likewise in Nigeria, if you work in Nigeria, if you live in Nigeria and you earn your income from outside Nigeria, you're enjoying the roads in Nigeria just like anybody else. You're enjoying the air we breathe in Nigeria, if for anything. And so for that reason, you got to pay taxes to Nigeria and not to America.
Now, as the icing on the cake, the new bill hinges heavily on tech infrastructure. The new law requires e-invoicing and digital reporting to track transactions in real time. This way, the government and the new tax governing body can capture more revenue, reduce leakages, and stop tax evasion. So, with ink and paper, we all know that loopholes tend to exist. However, with data and digital oversight, that probably won't be there anymore. So, let's look ahead. The proposed goal for these tax reforms is to move Nigeria from a debt-heavy economy to a revenue-driven economy. Tax funds schools, hospitals, roads, and even security. So, this approach kind of makes sense. We do have to point out, though, that in reality, it is not as simple. Apart from the fact that moving away from a debt-heavy economy is heavily dependent on the government avoiding further borrowing, it is also dependent on a thriving economy. While this bill protects lower income earners and small businesses, the people at the top of the food chain paying the most in taxes tend to suffer the biggest hits too. With issues like inflation and lack of infrastructure still pressing down, the hope now is that the government can and will allocate the resources where they are needed to improve the quality of life of its citizens. This is Nigeria's boldest tax reform in a long time. It promises simplicity and fairness, but the actual test will be in the implementation. For now, Check your personal income, business revenue, and everything in between to understand where you fit in this new landscape. But what do you think about this reform? Is it good for us, or will it only make things worse? Let us know in the comment section below, and watch this video about why everything is so expensive in Nigeria. I'll see you in that video.